The market isn't just dumping software, it's getting rid of the stocks that will be put out of business by AI, and it's looking for the AI winners. And I won't waste your time in today's video because I've already discovered that Uber is setting up to be one of the most mispriced AI opportunities in the market today. And that's exactly what we're going to figure out in this video, going through the estimates, earnings, and valuation to discover where we should be buying. If that sounds interesting, I've worked with Wall Street investors and I want to deliver you all the framework I use to figure out what's actually driving returns in the market. So hit subscribe if you're ready to pop off in 2026 and let's go. Before we get into where Uber's heading in the future, let's just take a step back and remind ourselves what Uber actually is. They're the largest global mobility and delivery marketplace, and all we have to do is just type in a destination and a pickup, and we can see all of the products that they're offered on the left-hand side of the screen. And this is where Uber has definitely seen a significant amount of investment flow into it over the past couple of years. As we know, they have the largest network and they continue to expand and improve their offerings. And the core success of their business has already translated into their financials. If we look at their most recent earnings release that came out a couple of weeks ago, on the right-hand side, you could see the 2025 full year results, and comparing that to the year-over-year change, I've already highlighted their trips, which were up 20%, their gross bookings, which were up 19%, and the revenue, which was up 18% as well. So everything on the top line basis has definitely seen very explosive growth. It is interesting to see that more people every day are choosing to use the Uber app. And it gets more exciting as we go down the list. As we look at adjusted EBITDA in the middle there, that's up 35%, which is a huge year-over-year improvement. And going down to the bottom, free cash flow is up 42%. So this company not only continues to grow its top line, but they're starting to see a lot of throughput to the bottom line financials as well. And I didn't highlight their net income or EPS. And the reason for that is because over the past couple of quarters, on the top hand side of my screen there, I highlighted their income tax expense or benefit, even though this value is negative. You could see down below, it translated into very large percentage increases in their EPS. And I think when people look on the internet and they think, oh, Uber has a very low historical PE ratio, it's not really accurate because they did see a massive tax benefit. And that's actually why the next 12-month price to earnings ratio is actually trading higher than historically for a traditional company that should actually be backward. We would expect more earnings in the future compared to the prior periods. What I'm looking at specifically is the EV to EBITDA multiple, which is what you're supposed to see. The next 12 month is actually lower than the prior periods. And going back there to the financials, they're doing $8.7 billion, which is up 35% year over year. So this is how I would respect the company on the EV to EBITDA multiple. So 2025 was another good year for Uber. And as you can see from their investor presentation, they continue to expand in almost every market. They're getting out into more desolate areas of the United States as well, where there's a lot of high demand. And they're expanding into everything from micro-mobility to taxis, and everything's looking good on the fundamental basis for this company. But that's not really what investors are worried about and why the stock continues to sell off. It's actually a completely different story. If we think about big tech right now, everybody wants a piece of the autonomous vehicle market. And if we think about what Tesla's doing, or a Waymo, or a Zoox, which we're going to discuss all three in today's video, they're all coming out with their version of their own robotaxi app, and that's putting a lot of downside pressure on Uber, as investors just don't understand if people just go on the Tesla app and they order a robotaxi, as you can see, why would you go on the Uber app if Tesla's able to source those consumers directly? And I actually found a really interesting clip from Dara over a year ago discussing exactly what he sees is going to play out.
Everybody wants on-demand everything. On-demand transportation, on-demand delivery of food, grocery, pharmacy, and now we're actually powering other businesses in terms of real-time delivery. We want to empower the local merchant to Amazon can get it to you next day. We essentially are providing logistics on demand for the Walmarts of the world, for the Apples of the world, but also small, medium businesses. And this idea of being able to push a button, get to a place, or get anything that you want immediately, it will automate over a period of time, but the growth in the industry is pretty incredible.
After hearing that, my first instinct was we've definitely seen this before with Uber Eats, and we know that McDonald's has an app, DoorDash has an app, and why do all three exist? It's because customers want choices and they want a product delivered to their door right now, faster than anybody, and they're going to choose who can do that the best. And Uber has more customers than anybody, and that is exactly where the company is headed into the future, and I think is one of the most mispriced AI opportunities in the market today. We look at their investor presentation once again, and you notice two things. One, they're in more cities than anybody that is offering autonomous vehicles, and two, they have more partnerships than anybody on the planet right now. And that's exactly what Dara is explaining with competition from the Cybercab app and the Waymo app is they're going to choose to partner with the Uber network, and you're going to be able to choose one or the other. And that example could not be any more clear because actually today on the left-hand side, Zoox, which is owned by Amazon, they just announced that they're actually going to be offering their rides on the Uber platform as well as launching their own app. And same on the right-hand side there, Joby as well in Dubai. They're able to call a Joby helicopter from the Uber app. I think the way that this is going to play out is you're going to have the Zoox app if you literally just want a Zoox ride. And if you have friends with you and you're like, hey, let's go catch an autonomous vehicle. But if you're trying to get somewhere in a hurry, you're going to go back on the Uber app and just see whatever is available. It doesn't matter if it has a driver or if it's autonomous. You just want to get somewhere today now. And that is where Uber strategically has been operating from ahead. We already saw the story play out again with Waymo. People thought the Waymo app alone was going to put Uber completely out of business. And how silly does that sound in hindsight? Because Waymo and Zoox and potentially Tesla, which hasn't been confirmed yet, they're all going to partner with the Uber app and they're going to want the customers that are already on the Uber network. And maybe you guys have heard this story before and you might be saying, well, we already know this, that's kind of obvious and the stock is selling off for a different reason, but I can't seem to find one because the business is continuing to grow at a really healthy rate given the size of the company. And that is only the direction that we're seeing globally. If we think about the number of autonomous vehicles that will be hitting the market across the globe, that's going to grow at a high single-digit percentage all the way out to the end of the decade. And I think it's safe to assume that it'll only continue that trend out into further decades. The future will definitely be autonomous. Uber understands that, and they actually designed an entire business unit to capitalize on that demand. They just launched their Uber Autonomous Solutions mobility unit. And if we scroll down in the press release, Uber Autonomous Solutions is designed to complement their strengths for the companies that they partner with, providing them operational depth wherever they need it, whether that's demand generation, ride experience, customer support, or fleet management. When they partner with the Uber network, they can scale more efficiently, operate more reliably, and move faster. So Uber's operating from ahead, and an easy way to think about this partnership and business line that they've been rolling out is the fact that they see more rides than anybody right now, and whoever wants to potentially train a new vehicle on that data is going to have to partner with Uber to get access to it. And I think it's really hard for bears to wrap their head around the fact that it's more easy than ever to literally just go on YouTube and listen to what a CEO has to say about their company and then watch it play out in real time. Going back to their investor presentation once again, it's comparing AVs on the Uber network in those black bars at the bottom have significantly higher trips per day and are seeing a faster by 25% estimated time of arrival. So that is a testament to the technology that the Uber platform delivers in terms of sourcing the vehicles and delivering you where you want to go the fastest. So guys, drop a like because I'm really putting in that work to deliver you all high growth setups. And I want this to be a certain video that you come back to a couple of years down the line to think, wow, this company was pretty obviously going to hit $1 trillion in market cap, and wrapping everything back together, as we've already discussed, to figure out if we should be buying this thing. We can just look at the revenue. That's going to only be up only, and we're going to see the revenue impacts from Uber being the #1 leader in autonomous vehicles, offering more than anybody at some point. And this is where it gets even more exciting, looking at the center of the screen, which is their share count over time. That's continuing to go down as they are redeploying that cash flow back to investors. And you can see the capital for this company, the entire corporate structure is going in the positive direction because the debt to capital ratio has continued to trend down over time as well, proving that this is not like the dot-com era where they only need to invest more and more and take on more debt to see lower returns. And we want to think big picture here and hold this thing in our portfolio as long as possible. So we look at how the income statement looks out to the end of the decade. They're going to hit $89 billion in revenue by 2030 at today's estimates, which these can go up or down, which we're going to discuss shortly here. But really what I want to highlight is if we look at their gross margin, that's going to hold flat as revenue continues to go up. And we don't actually know going down to EBITDA if this company is only going to become more and more efficient over time as they continue to develop more products better. Their EBITDA margin at least is going from 17% in 2025 all the way out to 22%. So that's really healthy to see, as well as more of the throughput from profitability falls to the bottom line and back to shareholders in terms of share buybacks. And stocks do definitely follow earnings. And if we just look at Uber's top line revenue estimate over the next 12 months, that line in blue, it's just up only. And this is where I think Wall Street, as far as I can see reading through the sell side notes, I don't understand why revenue estimates actually were lowered here, as we do know that Uber, even today, like I said, with the Zoox partnership, the bears think that they're going to see a revenue decline from people leaving the app, But that's only been proven to be not true in the short term. As we know, Uber continues to expand their partnerships, which should lead to more revenue over time. So I think these estimates will have to be revised once again as Uber continues to develop itself as the #1 player. So it really comes down to, where do we buy this stock at? And going back to what I said at the beginning, where I think the price to earnings ratio is going to take a couple more quarters for that to be a reliable indicator. So relying on the bottom hand side of the screen, which is that EV to EBITDA multiple on the next 12-month basis, the stock has gone up over time. We know they have better earnings than ever, and the valuation continues to go down. So I think this is a pretty attractive sell-off as long as things start to cool off, no black swan events come out, Claude Cowork doesn't reclone Uber or something. You're getting a better and higher profitability company at a lower multiple, which is exactly what you want to see. And comparing that to what Wall Street has out there, they're expecting at least a 110% price target for this company. And if you're like me, and if you think this company is going to shoot past $1 trillion market cap at some point, hit subscribe, let me know in the comments below for what you guys like to see next, and check out the other stock analysis videos, which you can find on the screen now.